we are a day away from the Fed meeting, and deciding most likely that they're going to keep rates steady. But we're in a very different, capital markets environment than we were in, say, 2021 when rates were at historic lows. Can you talk a little bit about how your job has changed and how Kennedy Wilson's kind of mindset around construction financing has changed since 2021?
In 2021, rates were super low. Everything was very aggressive, and we were able to do quite a bit of business. And then we stopped lending about halfway through the year just because we saw the market getting pretty frothy, and rates were getting too low, and we didn't feel like we were getting paid for the risk. And then the bank had some issues, and so there was kind of a distressed bank sale, and we sold our portfolio, and then the whole team came over to Kennedy Wilson. And Kennedy Wilson is obviously, it's not a bank, so that makes it much easier to deal with. Our money comes primarily from from a casualty insurance company, and so we have different capital, and the capital's a little bit more flexible and easier to deal with. Obviously, interest rates have gone up quite a bit, since 2021, and it's made a big difference in the way people are lending today. The pie has definitely gotten smaller of all construction lending, because that's what we focus on is construction lending. And the pie of construction lending deals is much smaller than it was in 2021. However, the number of participants in the senior construction lending space has also decreased quite a bit because you do not have very many regional banks involved in the construction lending now because they have had so many issues, especially all the regionals have had many difficulties with the regulatory environment, capital requirements, and liquidity requirements.